Good morning, everyone watching live on BAM YouTube. Let me know in the comments what market you are tuning in from. The hot sheet covers what you need to know about the real estate industry in a 24-hour time period. And on today's hot sheet, I will cover the drop in housing inventory, single women setting the trend in home ownership, and more comments from the Federal Reserve. Today is Tuesday, February 7th, and the hot sheet starts now. Welcome back to the hot sheet. Inventory and purchase applications data both fall together this week. That's right. Inventory, for everybody out there that is battling commenters on Twitter like I am or on YouTube. Yes, inventory is dropping, not soaring, not increasing. There's a whole bunch of people. We're going to get into, we have so many slides in the daily download link below where you can get all of our sources, every single show, and all of the slides for absolutely nothing. We're going to have that down below so you can dispel all of these people that are saying, well, inventory just keeps going up. So when supply goes up, obviously that's going to bring prices down. They're going to crash 20, 30%. Use these slides, use these charts to show people, hey, bozo, you're wrong. Inventory is not increasing substantially. Now, let me know in the comments if your market, there are certain pockets where, yes, inventory is rising. Hit the thumbs up if you agree that overall, certainly nationally, 99% of markets, inventory is not increasing. In fact, it's dropping, and that's what the national number shows us. Despite mortgage rates briefly falling below 6%. Oh boy, we saw where it went yesterday. My apologies on the screen share there. We saw where it went yesterday. We're going to talk about that a little bit more later today, that the 30-year fixed mortgage is an extremely volatile situation right now. But despite briefly falling below 6%, both housing inventory and mortgage demand fell last week. Okay, so purchase application data was negative 10% week to week, but still positive for the year. So we still have a positive showing for demand this year. But when we're living in this volatile situation, it's like a day-to-day situation with the interest rates. You're going to have some weeks where purchase applications are down. You're going to have some weeks where purchase applications were up. Last week was one of those weeks where purchase applications were down. Luckily, demand was down because inventory was down. Again, if we continue to see demand just outpace this inventory, we're going to get into a situation last year where these multiple offers, which we are experiencing right now, turning to bidding wars, right? We don't want everything going over ask like we saw last year. If there's multiple offers, they're all coming in around asking price and it's based off of terms, that's one thing. But if it turns into 20, 30, 40, 50,000 over asking price, that's going to be another thing. The Fed's not going to want to see these inflated house prices. Okay, so housing inventory decreased by 8,664 units, a more extensive inventory decline than we saw in the prior week. That is not necessarily good for affordability and for where we want to end up later in the year as it relates to inventory. In NAR inventory levels stayed the same from last week at 970,000. I want to make sure people understand this because we're about to get into some of these other inventory levels here in just a second. That the NAR inventory levels that I just showed you here on the screen, this 970,000, which we want this number to get up to about 1.5 million. This number here is total inventory, active listings and pending listings. So these are all homes on the market before they go and close. Okay, so this is the total number. Weekly inventory change, according to Altos Research, fell from 465,654 to 456,990. That's where you saw that 8,000 plus drop that we just referenced. This is actual homes available for sale. This number here is what's actively on the market and not pending or in escrow, as you may say in your market, under contract, right? It's where there's not a purchase agreement between a buyer and a seller. These are just the homes that are active, right? It includes new listings into that number. Last year at this time, the same week, we fell from 271 to 255. When people see this right here, okay, well, we have 450 plus thousand homes available for sale, where last year we only had 250,000. Of course, Byron, inventory is up. Yeah, inventory is up from nothing, number one, and from 2 COVID years. But inventory right now, as we just referenced, is on the decline from the last week. We just saw it, right? You just saw that we have a decline in 8,664 units. And by the way, for my hot sheet people, my tone here today is not directed at you. I love you guys. Give me some love in the comments. Hit the thumbs up if the feeling's mutual. My tone is for all of these idiots on Twitter, all these idiots on TikTok who are just talking about this 30% drop. Like, where is it coming from is my point. So we know that if we actually look at what's happening week to week, inventory is down. Well, you can say, well, year over year, it's up. Sure, it is up. It's up from levels that were COVID based and completely abnormal and basically nothing. If we look at the history of time where we are in, I don't know what Jeremy Knight said. I'm sure it was something. The reventure. Oh my goodness. This is what I was talking about yesterday, Jeremy, that reventure channel. Jeremy, you and I, we've got to get him on a long form pod. It's just insane. And I've got in topic 2, when we talk about single women, I think I have now untapped the reason why there's so many of these commenters on YouTube that believe this crap that prices are going to drop 30%. I'll get to that in a minute. If we look at where we were the last couple of years, inventory is so abnormal from the 80s until today, right? Look at this chart. We need to be over to that mean line right here. This is where we want current available inventory as well as pending sales. We have a huge gap right here, and we've had it for quite some time. It started to drop in 2016. It's something we saw a little bit in the 90s, and we saw it a little bit in the early 2000s before the run up in the great financial crisis. But we've never seen anything like this over here. We have an extreme shortage of inventory. It's why prices have absolutely no chance overall to drop 30%. Maybe there's going to be a couple markets here and there that will see something like a 15, 20% drop. Those are going to be the outlier, not the norm as it relates to the 2023 housing market. Okay. All these slides, again, are available for you in the daily download below. So you can grab those. They're going to be unmarked. You can grab them and use them in your market for anyone who is saying, hey, inventory is on the rise. Inventory declined by 2%. We just talked about that with that 8,000 plus drop. This is according to Altos research. Okay, so that's just in the last week, inventory declined 2%. We're actually going further down right now at a time when we usually see this seasonal uptick. We're hopeful that we will see a seasonal uptick in the next week, 2 weeks, certainly by the end of February. We want to see inventory going up because we know that's going to help affordability. And we know that the Fed's going to like it if prices don't go up in the spring market. So here are the last 2 years. Okay, so inventory is up, sure, year over year from nothing. There was nothing there. If we look at 2020 to 2015, again, this chart shows you that we're nowhere near normal levels. We're nowhere outside of money printing years where we just printed trillions of dollars the last 2 years. We're nowhere near those levels of where we should be for inventory. So this is something that all of those commenters, everybody in the market that's getting scared by these commenters, they should see this chart. They should understand, wow, okay, it's likely that I'm not going to see some 20, 30% drop if I'm sitting on the sidelines and somebody from, like Jeremy said, from reventure told me to sit on the sidelines in 2021. Maybe I should stop taking that advice, because in 2021, I could get a house for 40% less than I can today. And in 2021, I could get a 3% mortgage rate. I think everybody that was in that situation is doing the Macarena right now. Rebecca from Simpsonville, South Carolina, best city in Greenville County. I'll take your word for that. Inventory was out of 230 inventory is 178. I don't know. I'm having trouble read that. Maybe re-comment that and then I'll reread it. It's probably me, Rebecca. It's not the way you wrote it. I'm probably definitely the problem there. All right, let's look at another chart. Again, all of these are available just to reinforce what's going on here. We had only 52,000 new listings in the last week. We had 11,000 of them just sucked out of the market, just completely sold. Now, listen, I know what's going on too, and let me know if you see the same thing in your local market. A lot of this new listing inventory is crap. So the buyers are like, boom, good, pride of ownership, great house. I'm going to go knock that off the market. And there's some of the stuff that's sitting there, some of the stuff that has seen price reductions is garbage inventory because people are like, okay, I haven't taken care of my house in 20 years. I'm going to go dump it off in this market. And buyers are much savvier than they were the last couple of years. And those are the ones that are sitting there. But this good inventory, it's getting taken off the market immediately. Okay. Total single family homes pending contract with new contracts per week, 279,000 single family homes in contract. That's up 6% per week. It's 26 fewer last year. So we have much less demand than we had last year. But last year we also, this time of year, had people going $50,000, $100,000 over asking price. And we can all agree we do not want to see that because the Federal Reserve will ratchet up these rates even higher than what they're anticipating if we see that again. They, in June, said we want to reset the housing market. They did that. We don't need another ultra aggressive reset. Tampa is hovering at 3.4 months of inventory after trending towards 5 months of inventory. Okay, so Tampa, what Dylan is saying here in the comments is Tampa saw an increase of inventory last year when the Fed reset the housing market and it started going up towards 5 months of inventory. And now it is decreasing again, trending more towards 3.4 months of inventory. Guess what? By the way, 5 months or 3.4 months of inventory is still a seller's market. Anything under 6 months of inventory is a seller's market. So anything that even goes up to 5 months of inventory, I say, okay, that's good. That's normal. We want 5 months of inventory. That's where a normal market should be operating. 3.4, by the way, Dylan, is too low, especially with the demand for folks coming into Florida and specifically the Tampa area. So when I see it trending back down to 3.4, I think we all would agree, hey, we want it back up to 5 months of inventory. That's going to be much more of a normal market. All right, percent of properties with recent price reductions. Here's another theme that you're going to continue to hear on the internet is that all these homes are reducing price. Okay, yeah, we're up significantly in total price reductions. It goes to my point. Let me know in the comments if you agree to some of this crap that's coming on the market. People trying to take advantage. So some of these really nice single family homes that people bought at a 3% interest rate or refied at a 3% interest rate, they're not hitting the market, right? A lot of these homes that are affordable and have pride of ownership are not hitting the market. A lot of stuff hitting the market needs a lot of work. Okay, but there's fewer price reductions every single week. So I keep hearing people say, and ReVentures, one of them that Jeremy pointed out, price reductions are soaring. Well, in November and December, price reductions were up, but from January to February, they are on a straight decline down. We saw where we hit. This right here is where the Fed reset the housing market. Okay. And so now we're actually coming down from that level. The entire month of January, price reductions have been lower than what we saw in all of the second half of last year. So anyone that says price reductions are increasing in 2023 would be wrong, and just kindly inform them about where it actually stands today. Dawn McNary, the general public is not understanding builder price reductions versus single family resale. The first thing is reducing, the first is reducing, the second is not. Right. So There's definitely a difference between new home sales. Listen, most of the consumers, most of the people in the general public, when they hear new home sales, they do not understand that is new construction, newly built homes. Okay. It's your job, Dawn, I'm assuming, and I believe Dawn is a real estate agent. It's your job to go out there and make sure that they understand that they've got the information in layman terms, taking these charts and writing over the top of them as you give them that information so they fully understand it. Median price point for everybody that thinks we're, going to, drop significantly on price. Right now, we're at 415,000 median home price for U.S. single family. Okay, new listings 380. The hope is that we're going to meet somewhere in the middle there. As these numbers kind of touch in this spring season, that hopefully we will get enough inventory, and these new listings will show us that okay, we can get somewhere between those two numbers. Because let's face it, as a median price point, this number's too high in America. But for everybody that bought in 2021 that was told they were an idiot, I don't know. I think they're doing okay. I think they're feeling pretty good about their 3% interest rate and where they bought. And we probably likely hit bottom. This chart's also available for you for homes that were receiving multiple contracts. This is the time frame where the Fed said, okay, we need a reset. We've got too many homes that are getting multiple offers, which means there's bidding wars happening and they're going over ask. So you saw that decline. We hit bottom. January is not out. I'm assuming January probably won't be that high. Okay. So I'm assuming that January is probably going to be a little bit higher. It'll be interesting to see where January comes in, because anecdotally, we all know that January has seen a ton of multiple offers. Hopefully not bidding wars, because that's where we get into trouble. But it appears that multiple offer decline has hit bottom. Bobby, I don't see Jeremy's comment there. It's something in green. I don't know what that was, Jeremy. I don't know if he had a comment or not. Love to address it if he did. Shout out to Jeremy, by the way. Does a version of similar to this show. It's a little bit different because he gets into all kinds of things that are happening in Austin for his local market. You may want to go check out what Jeremy's doing on his YouTube channel if you have a local market to advise. Just spin off of the hot sheet. He's doing that a couple times per month. Okay. Here's another thing that I think a lot of people are reading. These economists who really have no name but something to sell, like Ian Shepherdson. Okay, he's got this is Fox Business. He's got a company called Pantheon Macroeconomics where he has clients where he's selling them data. And everybody that, like the other YouTube channel that we mentioned before, that is selling this price decline, is it basically incentivizing people to believe that they're going to get some huge drop. He's talking about this 15% drop. Why? He's saying, and this is from an economist on Fox Business who's supposed to know what the heck he's talking about. He's talking about growing inventory being the reason that there's going to be this 15% drop. And he's not talking about a specific local market. This guy's talking about national numbers. He's selling this crap to people that are, in his, whatever he has there, that macroeconomics company. He's selling them this belief, and he's probably been selling it since 2021. Don't buy. Wait, I'll tell you when the right time to buy is. And he's costing people a lot of money, because if he was just paying attention to the hot sheet, he would know that inventory is actually declining monthly. Okay, here's the reason I think maybe a lot of these males in the comments are rooting for a 20-30% drop. It's because single women are just dominating them when it comes to home ownership. Single women are setting the trend in home ownership. This is on nowbam.com. You can get the article down below in our daily download where we put all of our sources. According to new analysis by LendingTree, single women are more likely to own a home than single men in 48 out of 50 states. While I'll add this, while single men are sitting in these YouTube comments and on these Twitter feeds, and I don't see any women doing this. I see mostly men and no profile pictures doing this, where they're talking about this 20-30% drop. Just wait, 2008 meets 2023. Single dudes, get off the Twitter chat. Stop hoping and crossing your fingers that you're going to get a property for $1. Go make some money and catch up to the single women out there in America. Data from the U.S. Bureau of Labor Statistics reveal that while women earn on average 83 cents for every dollar men earn, single women own roughly 2.46 million more homes than single men. So women are, with everything else going on in their life, they're working maybe a little bit less than single men, or maybe they're getting paid less, right? That's a whole nother debate we won't get into, but they're still taking that money, being smarter with it, and making an investment that they know is going to help them long-term in their wealth. And single men are just complaining about their situation. Factors that defy the income gender gap include a greater desire for homeownership and more readiness to make sacrifices on homeownership. Okay, so let's look at some of these states. We'll put the link down below so you can grab this. And here are some of the states that highest homeownership rates for single women. Louisiana, 15.6%, compared to 11, basically 11% for single men. Alabama, 15% compared to 11% for single men. South Carolina, same thing, basically 15% compared to 11% for single men. Those are states with the highest rates of home ownership. Okay, states with the highest rates of home ownership for single men. Okay, North Dakota, Wyoming is basically flat. You got 12% for single men, but single women have them there, 12.45%. South Dakota, basically flat, 12% to 11.5%. North Dakota is another one. Okay, so even where single men have the highest rate of home ownership, single women are right there with them. State with the widest gender gaps for single homeowners. Okay, Florida, almost it's over 4.5%. Single women got men by 15% to about 10%. Maryland has a 4.5% gap. Single women at 13.4% versus 8.9% for single men. Delaware, 14.5% to 10% for single men. There's a whole bunch of interesting information there that you can parse through. I'll put that down below in the daily downloads, of course, or you can go search it at online nowbam.com. So this is going to be an article I'm just going to start dropping into these comments too, because for all of these like dudes that are saying 30% drop, hey, just try to go catch up to a single woman, and maybe some of these single women, maybe you won't be single yourself. I have young guys calling me every day to buy real estate, and they think it's crazy when I tell them they need to get pre-qualified. Cody, like it's crazy that they have such an ego about the process. I need to get pre-qualified. I'll just wait till prices come down 30%. All right, bro. Yeah, keep waiting. You'll be living in your mother's basement like so many other people have since the 90s. And you'll just be waiting and waiting and waiting while other people are going out there and building their wealth in this great country of America. Okay, we're going to be watching here today closely for some comments from Jerome Powell. He's speaking again so soon after his comments last week after the FOMC meeting. Jerome Powell is going to be speaking at 11 a.m. today at the Economic Club of Washington, D.C. We'll be watching closely for that all week. We're going to be having other Federal Reserve commenters coming out. We also had Fed's Neil Kashkari say central bank has not made enough progress keeping his rate outlook. That's Minneapolis Fed president. We're going to hear from, we did hear from the Atlanta Fed president, according to Bloomberg, who said similar comments that the explosive jobs growth is evidence the central bank has to do more work when it comes to taming inflation. So we talked about this a bunch on yesterday's hot sheet. Obviously, when the news came out on Friday, we covered it. This job growth is something that the Fed is going to, and that's why I'm really interested in what Jerome Powell says today, because he spoke before the job growth went to 500,000 when we were expecting less than 200,000 jobs. This is going to be something that we need to watch closely. Is he going to use language where we might not be at a 25 basis point increase in March, but we might be going back up to a 50-point basis hike? We've seen what happened with the 10-year and the 30-year just this past week, where we're at 5.99 last week. And then all of a sudden, these job reports come out and we're back up over 3.651. We know that when we get into the 3.4s, we're going to be more confident in a 5 handle on the 30-year mortgage rate. We also know that when we get up over 6.5%, when we get closer to 7% on the mortgage rate, we have buyers and sellers both go to the sidelines. We haven't seen, because we have 6, 7, 8 months of data now since the Fed really got aggressive and created a housing reset. We haven't seen prices drop, right? In most areas, they've dropped 2.5 to 4%. I know, I get it. There are a couple cities that are an outlier to that. But in 99% of America, we've seen about a 2.5 to 4%, or in some areas, we've seen a 0% drop in home prices. So we're not going to see, if we get back up to 7% mortgage, 30-year fixed mortgage interest rate, this incredible drop in prices. We've got the data looking backwards over the last 6 to 9 months to show us that. But we will have people starting to sit on the sidelines. And yesterday's 30-year fix went completely insane and went to 6.39 with the increase of the 10-year. I expect us to sit pretty close to that. The 10-year is up a tick again this morning, as we just showed you. So I don't know. We could be in the 6.4s. We could be inching closer to 6.5. I don't know where it's going to come in, but it certainly looks like we're going to be staying a little bit higher. This is why, and I put out a clip yesterday from Knowledge Brokers podcast. This is why talking to your lender daily, if you're a real estate advisor, if you're a consultant, if you're an agent, I want speed dial. I want a daily conversation. I want to know what's happening daily. I want to have all my partners having conversations with me every single day, so I can look for the inconsistency, so I can look for the opportunity. So I'm up to the minute. This is what usually happens in the finance world. Okay, this volatile situation with rate movements. This is not normal on mortgage rates. Talk to a lender. They'll tell you you could usually just set your watch. It was very small little moves. This volatility in the 30-year fixed is very abnormal. So you're going to have these pops of opportunity. Thursday was one of them, where we saw 5.99% 30-year fixed. And then you're going to have areas where we don't have as much opportunity for buyers. I want to be on it if I'm working with buyers in this housing market right now. Okay. Just a reminder, we've got the link to the AI tools ebook down below. That's a 38-page free ebook that we partnered with Chris Smith on. It's the best ebook for AI, for real estate tools, for real estate agents on planet Earth. It's absolutely free. It's insane. So that's down below. And then today at 11 a.m., we've got a real word that you do not want to miss. I'm sorry, that's at 2 p.m. Eastern, 11 a.m. Pacific time, a real word podcast you do not want to miss. Thank you guys so much. This one was a lot of fun. Share this with somebody who thinks prices are going down 20, 30%. Share it with somebody who wants that consistent 24-hour look back on the housing market. I'll see you here back tomorrow live at 9:30 Eastern on the Hot Sheet. Until then, toodaloo.